Good morning, everyone. Magandang umaga, Pilipinas. And good morning to all our viewers from across Southeast Asia and beyond. Thank you for taking time to join us this morning. If you are new to this webinar, this is actually the 12th webinar since it was launched last April 28. This SEARCA Online Learning and Virtual Engagement Webinar, or SOLE for short, is SEARCA's immediate response to the emerging impacts of COVID-19 global pandemic on food security by maximizing the use of information and communication technology platforms to inform, educate, and share evidence-based solutions and tested technologies as well as best practices on the ground. My name is Kim Bantayan, and I am a program specialist of SEARCA's Training for Development Unit of the Education and Collective Learning Department. The short video shown earlier has given you a glimpse of what SEARCA is all about and what we do. But if I may add, SEARCA is hosted by the Philippine government on the campus of the University of the Philippines, Los Baños. So we are coming to you live from Los Baños, Laguna, the special science and nature city of the Philippines. We had an interesting and highly engaging webinar last week where our speaker, Mr. Joselito Florendo, shared with us some tips on managing cash flows and saving our hard-earned money. Today's webinar is the second and last installment of our SOLVE webinar series with the theme Agriculture Value Chains, Financing, and Investments. Our invited speakers will focus on how to solve income insufficiency in the time of COVID-19 pandemic through inclusive rural financing. SEARCA recognizes that rural finance offers a myriad of opportunities to improve the livelihood of the rural population. So we thought that it is high time that we discuss in more detail the challenges, the opportunities that financial inclusion represent. We will be answering questions on how do we improve access to finance of smallholder farmers in the rural areas. What is the government doing to improve access to financial services and loans so that small producers can invest in their farms and increase their productivity? What is the role of the private sector in advancing financial inclusion that would build the resilience of the rural population, especially in this COVID-19 pandemic? But before we proceed to our online conversation this morning, please allow me to just quickly go over some very interesting statistics gathered from the SOLVE webinar held last week, July 15, 2020. The infograph shows that 77% of our online viewers were female and the rest were male. This has been the consistent trend over the past 11 webinars that we've had where women consistently dominated our online attendees. The infograph also indicates that 384 individuals tuned in via Zoom, while more than 400 viewed the webinar through SEARCA's Facebook page. And lastly, we are happy to note that we've had online attendees not only from the Philippines, but also from Indonesia, Thailand, Vietnam, Singapore. This shows that the number of individuals and countries that SEARCA's webinar has reached so far. So we are trying our best to be able to reach as many individuals, farmers, and farming communities as possible through this online platform and really make a difference in the lives of our stakeholders. Now, going back to today's webinar, after my introduction and a few housekeeping points, our first speaker, Dr. Prasun Kumar, will share with us the experiences of the Asia Pacific Rural and Agriculture Credit Association, or APRACA, in addressing the numerous challenges faced by rural and agricultural enterprises in this time of pandemic. Mr. Ruben Simon Jr. follows with his presentation on Agri-Value chain financing from the industry perspective. The question and answer session follows after all the presentations. So how do you ask questions? During the presentations, we invite all of you to send in your questions via the comment section if you are watching us through SEARCA's Facebook page. If you are registered and tuned in via Zoom, please post your questions or comments in the Q&A section that you see at the bottom or top of your screen depending on the gadget you are using. We will collate the questions, and once we are in the Q&A session, our speakers will address them in the time remaining. May we request you to kindly indicate your location and or country of origin. It would be good for us to know where you are watching this webinar. We encourage you to please like SEARCA's FB page now by pressing the little thumbs up sign just below the cover photo for us to remain socially connected. By liking our Facebook page, you will regularly receive updates on our learning events, webinars, and postings on recent developments in agricultural and rural development. Please note that today's webinar is being recorded and will be made available on SEARCA's Facebook page and YouTube channel. You may also subscribe to SEARCA's YouTube channel. Today's presentation will be made available on SEARCA's website at www.searca.org. The slides shown during the past webinars have already been posted on our website. We will also be live tweeting this webinar, so you can join in the conversation using the hashtag SEARCASol. If you have issues or are experiencing technical difficulties with the Zoom online platform, please email my colleagues at solve@searca.org. Moving on to the webinar, while we are waiting for Dr. Prasun to share his screen with us, please allow me to tell you more about our speaker. Dr. Prasun Kumar is the Secretary General of Asia Pacific Rural and Agricultural Credit Association, APRACA, based in Bangkok, Thailand. Prior to this assignment, Dr. Prasun worked as a regional project manager of the International Fund for Agricultural Development, or IFAD, grant project, where he managed 5 country teams in China, India, Indonesia, and the Philippines. He was also an associate professor in agribusiness management and finance, downscaling expert for World Bank assisted project in development financial institution, international expert consultant in agricultural value chain development and finance for Food and Agriculture Organization of the United Nations, or UNFAO. He held senior management position in public sector bank, focused on agribusiness development, and consultant advisor expert on rural development to the government of India. It would be worthwhile to note that Dr. Prasun served as one of our panelists during the forum on reducing disaster risk toward a resilient agricultural sector held in August 2020 at SEARCA, and in partnership with the French Embassy in Manila. Dr. Prasun holds a doctoral degree in agricultural sciences and master's in business administration with a specialization in financial management, and is a certified professional in banking and finance. A prolific writer with more than 25 international publications to his name, he led a number of action research projects and impact assessment studies on agricultural value chains, agribusiness finance, and climate-smart agriculture and financing options. With that, we now turn over the screen to Dr. Prasun Kumar Das.
Good morning, viewers. So, today's topic for me is the engagement of the rural agricultural enterprises to boost economic activities during the global pandemic, the APRACA experiences. I will just go through a brief about APRACA. Those who don't know about APRACA, then I'll let you know about some of the issues and challenges. I think most of us know about that. Then the commitments of APRACA members in the region and the responses of the APRACA member institutions. And finally, just a few of the way forward and how to deal with this, the current pandemic situation and post-COVID-19, what our financial institutions are supposed to do. APRACA, as you know, was established in 1977 under the auspices of FAO, of the UN and central banks, rural finance and agricultural credit institutions. We started with the 16 country membership with 37 member institutions, but we've grown in last 43 years, And the current membership is from 24 countries with 89 member institutions. And all the ASEAN countries are the members of APRACA, except Brunei. Then we have the central banks and regulators. There are 12 membership, and then there are agricultural development banks are the major members of APRACA with the 23 agricultural rural development banks. Then we have of late in the end of 90s, we added MFIs, the big size MFIs in our fold as a member of APRACA. And then since then, there are many MFIs are the members. And currently we have 20 microfinance institutions are our members. In the governance side, that we have APRACA is governed by the executive committee members, which is there are 19 executive committee members, and then we have a current chair is the Bank of Ceylon in Sri Lanka, and the vice chair is NABARD India. So that's how APRACA works. I'm not going into detail of APRACA. You can see APRACA website and go to it. Now, what are the issues and challenges of agri enterprises due to the COVID-19 pandemic? I put it in three parts. One is the disruption of the value chains. Everybody accepted that there is a disruption in the value chain, where the supply and demand disruption for inputs, and the inputs become more dear, which is very important for understanding that why the value chain is not working or going to fail in few months from now. Then the farm outputs are stuck at the sources, means we have seen in any country and also as a regional perspective that place of production and place of consumption, the point of consumptions are different. So if the products are being stuck at the point of production, then the point of consumption are not going to get that. So that is a very big problem for the small businesses who are dependent on those product flow of the product. Then it significantly affected the household food consumption, which is very important. It has a nutritional aspects also. Then because of their low mobility and all these things. Then the second part, which is major issue of this particular webinar, is the income. So now we are in the reduced income, and then that how to increase the income, enhance the income of the farmers and also the other value chain actors. So what we found that the farm household income reduced due to low sales, significant reduction in the income by actors in the value chain and its supporters as well, like transporters, cold chains, warehouses, and then reduced employment of the farm labor and the informal sector who are involved in the agricultural value chains, and expenses increased due to health and other hygiene issues. Now, going to the impact of it is the threat to the food security. The household food consumption and nutrition have been significantly affected by loss of jobs in majority of the countries in ASEAN and other parts in Asia. We have seen that there are a big chunk of laborers. They lost their jobs due to this lockdown and other measures by the government. Then closure of borders hampered the regional and global food value chain. For example, like in Thailand specifically, we saw a lot of issues of our the inputs. Export and import of the foods, which Thailand is supporting other countries in ASEAN region. Then the affordability of certain foods are becoming very important because some of the countries they rely on the import of the foods, so they have been affected much. Now, commitment of the financial APRACA member institutions. APRACA member institutions, as you have seen, that we have the membership from the central banks, development financial institutions, agricultural focused banks, cooperatives, apex cooperative banks, financial cooperatives, then microfinance institutions. So they have a huge commitment to the government of their nations. So the financial sector and the major countries of the region are working. They provide essential services. So you have seen that in all the countries there is a lockdown, but the banks are open. So this is a major service as an essential services provided by the financial institution and APRACA member institutions. Then the financial institutions have put the place in different measures to mitigate and ease the impact by at a reduced interest rates. That is, I will give you a brief survey in my next slide that which of the countries are using these reduced interest rate. Then longer moratorium for the loan repayments, which is very important at this point of time because they don't have the cash flow to repay to the banks. Then support the debt restructuring, which is also important in terms of keeping the assets and liabilities of the banks in matching in the long run. Then besides the credit services, the rural finance institutions providers of services like savings, which is very important for, during this period, the savings was also less. So the people do not have, they might be having very low amount and they cannot travel to the bank or to the local financial institution. So the banks reach out to them to support them in their savings, and then also their insurances and other remittances, for example, in the Philippines, Nepal, and some other countries. Then made changes in the credit policies. They lobbied with the government and the central banks to make changes in their credit policies and addressing the impact on agriculture and allied sector. Use the digital channels, which is very important, and you might all of us have seen that during this lockdown period, how the digital channels have been used in the banking sector and how some of the banks have changed their operating system to the digital and system, which is very important. And the microfinance institutions and the cooperatives, who are actually the last mile banking support or the financial support to the hinterlands, how they supported and operated, even though with a skeletal basis. We have many examples from Philippines also, that how they supported their clients, especially in the fisheries sector. We have seen a major support provided by the MFIs to the fisheries sector. Then MFIs also offered a bunch of non-financial advisory services, including health and hygiene. By going into, especially in case of India, it's a very huge country where you have many villages, like 56% of the people lives in villages there. So they may not have the access to all this government awareness system. So these MFIs, because they are mostly the NGO MFIs, they have gone directly to the villages and supported them by to the awareness generation program. So now coming to the responses by the APRACA member institutions, we did a brief survey to the three sub-region of Asia, where South Asia, Southeast Asia, and East Asia. We received some responses from some of our member institutions from India, Nepal, Pakistan, Bangladesh, Philippines, Thailand, Laos, Vietnam, Japan, and China. Now, how they responded? Loan repayment schedule, as I already said, that differed for 3 to 6 months, which is effective for all the countries, including South Asia and Southeast Asia, but not in case of East Asia. Whereas interest reduction of borrowers to up to 2 to 5% on merit basis, this is for all the countries in South Asia and also in Southeast Asia. Upgradation and introduction of mobile apps for linking producer with the traders and actors in the value chain. It's all the countries. The smaller country like Bhutan and Nepal, they also supported they also reduced. They also added these apps in their financial transaction to support the people in the hinterland or the far-flung areas. Then waiving of the fund transfer fees from online banking. We have seen it in Bangladesh and Nepal that they waived this fund transfer because they have a much their economy, they depend on their some of the around 25% of the GDP in Nepal depends on the remittance. So they have to reduce their fund transfer fees, which is very important for the people, those who are the recipient. Then Corona emergency loans for agriculture producer, aggregator, and cooperatives. It's in Nepal. We have seen this specific product they designed. Most of the banks, our member institutions, they designed for the emergency Corona loan. Then in Southeast Asia, the loan repayment structuring and extension, as I said already, in all countries. 10-year no interest loan for the small farmers and fishers up to $500 in case of Philippines. So Philippines, they have done this. Then 5-year no interest loan for the small and medium agri enterprises up to $180,000, which is a very important step by the Bank of Central and also supported by the financial institution. Then moratorium of the loan of interest repayment for the lockdown for the 3 to 6 months for the small and medium agri enterprises in Thailand. Very low interest, the emergency loan for the customers for 1 year or more, Philippines, Thailand, and Vietnam. Then preferential interest rate for lowering fees of services. So they did the preferential interest rate and also lower the fees for the other services in the banking services for all the countries. In Japan and China, they adopted the mobile platform. As you know, in China, it is very important, and in Japan, 65% of the transaction is on the mobile apps only nowadays. So our member institution in Japan, they adopted this and they supported this with the small scale farmers and enterprises. Then setting up of safety net loans for agricultural enterprises is a new product for in China, where they have developed the safety net loans for the Chinese farmers. Then responses by the APRACA member institution, as I said already, that Agriculture Development Bank of Nepal reduced the interest rate from 11% to 9%, which is very high in terms of reduction. Vietnam Bank for Agriculture and Rural Development has introduced the preferential credit package of $5 billion to provide new loans for its agricultural client affected by COVID-19 crisis and lowering the annual interest rate. Encourage clients to use mobile application. As I said, all the banks have now encouraged clients for this mobile app. Then we have, and all the value chain actors. Then introducing loan repayment moratorium for 3 to 6 months. BASE, State Bank of India, Vietnam Bank, National Bank for Rural Agricultural Development, and then Land Bank of the Philippines. All of them have introduced this. Next, please. Then collateral-free micro loans in the Philippines, SAPC, launched this. Can you go to the next page? Yeah. The Agriculture Credit Policy Council launched the Aid and Recovery Scheme for collateral-free and zero-interest loan up to $500, along with the long-term repayment tenure. The Philippine Central Bank, the Bank of Central Filipinas, has eased its Note Your Customer procedure, and the Philippine Guarantee Corporation, the Philippine, they increased the guarantee coverage to 90%. Which is also very important, with a reduction of guarantee fees of 0.5%, which is very important step in terms of supporting the value chain actors. Then interest subvention by the APEX-FI and the refinance agencies, which is, we have seen that there is an interest subvention if the during this particular lockdown period, the farmers, they got a reduction in interest as a part of the subvention in their interest, and also a refinance. Like Bangladesh Bank, the central bank on Bangladesh, they refinance the banks for financing onward to agriculture for at a lower interest rate. So, and NABARD also did the same thing. Some of the cooperative banks also did the same thing. Now, coming to before I go to the way forward, just to give you some examples of how some of the countries have taken some measures to increase the income, which is very important for the farming sector. So, as we know, it is recognized that the farming is not a remunerative occupation. So why some of the government has introduced some of the measures to increase the income of the farmers. How did they do it? So they want to do in many other countries did it in many ways. Some of the examples like in Thailand, they reduced the input cost. So they reduce the input cost if for the BAAC, the Bank for Agriculture and Agricultural Cooperative members, if they are a member of registered member of a BAAC, they get inputs at a reduced cost. Inputs means all seeds, fertilizers, and pesticides. So which will impact to their cost of production. And then the tenant farmer, here there is a tenant pharmacy, and the wage laborers, they get a higher labor cost if they are working during the lockdown period. So this is one of the measures taken by the government of Thailand through Bank for Agriculture and Agricultural Cooperative, and now they are also going forward with a new product for financing the COVID-19 impacted farmers. So we are as APRACA, we will continue the policy reform process to increase income for farm sector actors and support the innovators in improving efficiency. So we are interested to work with the private sector along with our member institutions, those who are working with the private sector. For example, we have recently started working with one of the fintech providers in India who are through NABARD being a vice chair of APRACA, we are working closely with them. So that fintech, they need some kind of a support on the technical and capacity building of their credit officers. So we are doing that. Then effective measures to improve access to credit at a reduced interest rates, which is important at this point of time. And if you go to the FAO price index, you will see that the commercial crops, the prices are being reduced, whereas the staple food, the prices are increasing, which is a sign of low price. The market collapse in maybe in another 2-3 months. Because the harvesting has been affected and all these things. So this at this point of time we need to arrest this price hike in the staple foods, and also lowering of price in the commercial crops, commercial commodity. Issuance of loan without collateral, which we are since last 5 years we are talking about collateral free loans. So now we are now working more closely with the banks for working out some mechanism for loan without collaterals for the smallholder farmers. Then the governments through their Apex Bank need to assume the part of the credit risk with the financial guarantee mechanism. We have seen that most of the countries in Asia, the agricultural credit guarantee mechanism doesn't work much. So we are now trying to work with the government and the central bank to revive the agricultural credit guarantee programs in most of the countries. Then support interinstitutional coordination between the government agencies and financial institutions through APRACA. Then develop national and regional level contingency plan. We are at the end of preparing a contingency plan for our member institutions, which are available which will be available in our website. Then prioritize investments in agribusiness infrastructure, which we face that infrastructure. If we had good warehouses and cold chains, then this problem would not have happened during this lockdown period, and the price increase would not have been affected so much. Then promote agricultural SMEs, providing incentive to the financial institutions. Financial institutions need to be incentivized to promote the agricultural SMEs. Then investment in building capacity of the unemployed and particularly youth. As I said, that BAC is developing a project where they are trying to build the capacity of the unemployed youths and women, those who have returned to their rural areas as a migrant laborer or maybe an unskilled worker. Then establish dedicated team to assist our member institutions already did that, but still we need to provide more and more services. Then actively advise the farmers and rural entrepreneurs on options for receiving the government aids, which are very important, that because of their accessibility, they may not be getting all the advantages what the government is providing, and the assistance program for securing finance to restart, recover their business. I think I'm done. So thank you very much for listening.
Thank you so much, Dr. Prasun. It was nice to see you again. And thank you also for that very informative presentation about APRACA with its mandate of promoting productivity, inclusive growth, self-reliance and welfare of the rural poor in the Asia-Pacific region. Thank you also for sharing with us how the member institutions of APRACA are pitching in to alleviate the plight of smallholder farmers, rural and agricultural enterprises in these trying times, ensuring that there is uninterrupted financial services, other initiatives like loan repayment, restructuring, and extension, no interest loans for offering of no interest loans for smallholder farmers and fishers, moratorium loan and payment during the lockdown and other initiatives. Okay, thank you so much, Dr. Prasun. We'll get back to you during the Q&A. Again, may I remind our online attendees watching the webinar via Facebook Live, please start typing your questions now in the comment section, including your location or country of origin. So if you are tuned in via Zoom, please post your questions in the Q&A box at the bottom or top of your screen, depending on the gadget you are using. Moving on to our next speaker. Mr. Ruben Simon Jr., or Ben, is currently a manager under FSO Advisory, specializing on microfinance, agribusiness, and rural development. He has substantial professional experience working with microfinance institutions, or MFIs, commercial and thrift banks, cooperatives, as well as government and non-profit organizations. He obtained his Bachelor of Science in Agribusiness Management degree from the University of the Philippines, Los Baños in 2009. Ladies and gentlemen, please welcome the Director of Financial Services Consulting, Government and Public Sector of SGV&Co, Philippines, Mr. Ruben Simon Jr.
Okay, good morning, everyone. Again, I'm Ben from SGV&Co. Just a brief introduction on who we are. If you're familiar, basically we are known as the largest professional services firm in the Philippines, and we are auditing almost half the top 1,000 clients in the country. Our group, the consulting group, handles for the most part banking clients, and also we have discussions with the government, especially the Bangko Sentral and other players in the financial space. So, okay, my presentation is divided in two parts. So first, I'll be contextualizing how the agricultural lending landscape is in the Philippines and how are the banking sector responding to it. And the second part will be discussing about Agri-Value chain financing. Well, in order to understand how banks approach agricultural lending, let me first run you through the enabling law that mandates both government and private banks to lend to the agriculture and fisheries sector, as well as the agrarian reform beneficiaries. So basically, the Republic Act 10,000 or the Agri-Agri law says that banks should set aside 25% of their loanable funds for agricultural lending. This also includes both credit programs and insurance. So aside from directly lending to the sector, kindly focus on item C. It also allows banks to finance construction of farm-to-market roads and post-harvest facilities, which we know helps enabling producers to add value to their product, extend shelf life, as well as reach their intended market. In effect, the law outlines opportunities which the banks can explore in terms of serving the countryside market. However, the law also imposes penalties for the non-compliance to the 25% rule. So 90% of the collected penalties are divided between the Agricultural Guarantee Fund Pool or AGFP and the Philippine Crop Insurance Corporation, while the 10% is being retained by the central bank for their administrative expenses. For all intents and purposes, this law should have been able to increase the agricultural sector's contribution to the country's GDP. However, data shows that the sector's contribution even decreased from 13% in 2008 to just 9% in 2018. This is in contrast to the 60% contribution by the services sector. Well, there are several factors that contributed to this. Let's see how banks performed under the Agri law. Okay. In 2019, the banking industry has generated a total of 1.5 trillion pesos of loanable funds as mandated by the law, but only 707 billion was the actual exposure to agriculture. As a matter of compliance to the 15% mandated exposure to agri and fisheries, it only reached 10%. For the 10% mandated for the agrarian reform beneficiaries, only 1% was complied with. It should be noted that among banks, rural banks have been able to comply with the mandate. This can be attributed to their immediate presence in the locality and provides good access to financial services to the countryside. But rural banks themselves have challenges of their own. On the average, 10 to 15 rural banks are either closed or merged annually, both due to operational matters as well as challenges in complying with capital requirements, while some have been acquired by even larger banks. On the average, 2.7 billion pesos are collected from banks annually due to non-compliance, which mostly comes from universal and commercial banks. In some of our discussions with these banks, one key factor in their apprehension in lending to the sector is the riskiness of the business. There are a lot of factors to be considered, such as pests and typhoons, and to add to that, the seasonability of crops and their erratic cash flows, especially if you're employing cash flow-based lending. So they opt to pay the penalties instead, rather than take on the risk. Well, banking, after all, is a business of risk management. So to help convince banks to take on the challenge in lending to the countryside, we introduced a concept to at least see agriculture at a different perspective through agri-value chains. In essence, banks usually see agri-clients individually. So imagine these bubbles as clusters of players, meaning account officers mostly see each player as individuals and perform an assessment of their credit worthiness individually. Now, one way of seeing things from a financing standpoint is to identify each client's interdependence. So along the way, while the bank's clients fare as of the moment, any disturbance along the chain can have an effect to the system as a whole, which in turn will also affect the client's behavior in one way or another. This is basically the situation what we have right now during the pandemic. And seeing things at this perspective enables bankers to see weak links, as such credit products may not be suitable. This is where non-bank services or interventions might be needed, such as financial literacy trainings or technical and business support, which can be provided both by government agencies and non-government organizations. To help in achieving the full potential of the Agri-Agria law, the Bangko Sentral ng Pilipinas issued Circular 908 or the Agri-Value Chain Financing Framework. It encourages banks to have processes and procedures in place to identify value chains, do comprehensive value chain analysis, and subsequently design appropriate products to support the value chain. Well, in contrast to the Agri-Agria law, Circular 908 provides incentives for banks who will adopt this approach. Players in the identified value chains that are serviced by the banks are to be considered as compliant to the Agri-Agria law while providing them an increase in their single borrower's limit. In this framework, we can see the flow of financial services from institutions as well as the flow of goods between players. Compare this to the illustration I have previously presented. This framework shows the support subsystem that exists along a value chain. And this also illustrates the importance of non-banking services such as business and technical trainings. It is therefore evident that when pursuing agriculture as a banking portfolio, there might be a need to reskill or retool bankers to enable them to do more business development and coordination work with other players, such as the government and research institutions that provide these capacity building initiatives. Well, I would also like to emphasize that outside of the banking spectrum, other players such as cooperatives and microfinance institutions play a vital role in countryside development. In the industry, we call them the last mile financial institutions. They are present in localities that banks cannot penetrate. However, this does not necessarily mean that banks do not support the last mile location. It's just that it's more economical to support the financial institutions that do so. In fact, most cooperatives and microfinance institutions or even rural banks are institutional clients of universal and commercial banks. So we started with a general framework from the previous slides. Now we apply this on a specific commodity, say cacao. In the industry, we mostly talk in practical sense. So this visualization might differ from those from an academic perspective. So in this regard, we substituted the identities of players with general terms. But when we discuss this with banks, we specifically identify each players. Who are these producers? Who are these cooperatives or even exporters? So we start from their pool of clients. Then we expand to include those that which their clients are interacting to. So pretty much like contact tracing. We also identify who are the financial institutions supporting this pool of clients and see the competitiveness of their products. Again, I would like to emphasize the need to identify which non-financial actors provide capacity building initiatives for each commodity because non-banking services are just as important. Okay, ideally, this kind of analysis should be done per commodity and if possible on a per region basis. Value chains can also be measured and quantified on a credit risk standpoint. Again, because banking is a business of risk management. In this example, a client is assessed based on qualitative and quantitative factors, such as financial standing, the industry it operates in, as well as the management of the business. If you are a teacher, this is just like giving a numerical grade to a student. This is called the internal credit risk rating system or the ICRRS. So the lesser the risk factor, the higher the chance of the client to be granted a loan. So for other riskier clients, additional collaterals might be required or higher interest rates will be given. Now, the bank has this pool of data of their clients, and they have analyzed that those that have higher scores in the ICRRS have a lower probability of default. So this is the PD. Now, just to emphasize, these figures are for illustrative purposes only. Now, if we don't consider the immediate players within the client's value chain, we can see that the client have a very low PD. So in this case, it's almost 0.01%. So, but then again, his business relies on the producer for the sources of materials and the distributor for the marketing side. Anything that happens to these players have a direct effect on the business of the client. So let's assume they are also clients of the same bank. So these are their credit scores. So 90 for the producer. And these are also their corresponding PDs. Now, considering everything, we can see that there was an increase in the PD of client, although it's still the value is still small. This exercise can help in identifying weak links in a value chain, and therefore appropriate interventions can be devised accordingly. So one way of mitigating risks is to plan accordingly in terms of how to approach each commodity. One way of doing so is to do simple data visualization, such as this one. So in this slide, we can see how each commodity plays out in terms of growth trend and production. With this, we can be able to figure out what strategy to employ per commodity. So once we are able to identify which commodity to prioritize, then we create the agri-value chain analysis. So just to emphasize the need for further collaboration with other players, especially those supporting the industry, here's a technique developed by the OST's Project Datos. So using satellite data, so most notably from our Diwata satellites. If banks choose to fund farm-to-market roads, they can be able to monitor its progress and also see if there are projects that are started in the first place. Also, in using AI, fruit trees can be specifically identified and inventoried. This is particularly useful for crop insurance and to assess damages during calamities. Of course, these are just sample of what technologies can be used for the countryside development, among other things. And there's also this publicly available tool from the Department of Agriculture. So for banks, this can help in assessing projects, particularly crop production of potential clients. If it can work in a certain locality, also considering other risk factors and hazards, then they strategize their intervention. And lastly, as an additional risk mitigation mechanism, banks can opt to apply for guarantees under the AGFP, and for the producer's side, crop insurance by the PCIC. In closing, rapid transformative growth in the countryside can be aided through the use of economic corridors and a resilient countryside financial sector. Banking generally follows trade flows. The velocity of trade flows is a function of development and mobility. Development progresses with the presence and use of shared frameworks and roadmaps and credit and investment enablers. Mobility is a function of integrated supply chains, infrastructure, and commodity. So that ends my slide. Thank you very much and good morning.
Thank you very much, Ben, for your presentation on the Philippine banking sector and the agricultural lending landscape. And thank you also for enhancing our understanding of the Agri-Agra Reform Credit Act or Republic Act 10,000, which requires banks to allot at least 10% of its total lending portfolio to agrarian reform beneficiaries and 15% to farmers and fisher folk. In a recent article that I read, Governor Benjamin Jokno of the Bangko Sentral of Pilipinas is seeking to broaden the scope of the Agri-Agra law by allowing banks to also invest part of their mandated portfolio in green projects and investments in rural communities. Okay, so Mr. Simon also discussed the agricultural value chain approach and the way in which it supports the various actors and key players along the entire value chain by looking at their needs and tailoring services and products to one or more points in a value chain in order to reduce the risk and cost of financing and improve the performance of the entire value chain. We now move on to the Q&A session. The first question is directed to, I think this one is directed to Sir Ben. Sir Ben, the question is from one of our Facebook attendees. How do innovations in rural finance contribute to making access to financial services and the rural transformation more inclusive, and what are the adverse effects of such changes?
Okay, Actually, one of the trends that we see in the financial sector is the entrance of non-traditional financial players such as fintech. And what we've seen in regards to the trend is some players cut through the process of having an intermediary, and while others provide just financial services, other fintech companies also provide some technical support and access to market. I think the most important thing in an agri-value chain is an access to the market, especially in the producer side. And because if there's no access to market, there's no profit to be had for in terms of the farmers, and there's no value to it. And the downside of things is that since it is technology driven, there's a lot of change management in terms of how our farmers are adapting to these technologies, and it is important also that these farmers are also acquainted and to these changes, because what we've seen right now is traditions is greatly challenges by these disruptions in especially right now that there is a pandemic and that the challenges are in place. And I think technology plays a bigger role in this, in how we move forward, and how farmers adapt to it is the most critical thing right now. And if there are players that wants to come in, and I think that's the best way to move forward, how to acquaint our farmers and how they adapt to the changes.
How about you, Dr. Prasun? Would you like to add anything to that? The question is, how do innovations in rural finance contribute to making access to financial services and the rural transformation more inclusive?
No, always innovations are important, but as you know, then as Ruben was rightly pointing out, innovations in rural finance is now mostly directed towards the fintech. So to me, we are also supporting our member institutions to go forward with more and more fintech, adopting more and more fintech in terms of in terms of reaching out, which is currently required, is how to reach out to the smallholder farmers and to the people in the far-flung areas, like for example those who are in the mountains of in Nepal or even in the Philippines. It is very important to have a system through which the fintech can only support. So the fintech can take major responsibility in the near future on the innovations in the agricultural finance and value chains.
Thank you, Dr. Prasun. Another question here I think this one is also directed to Mr. Ben. Mr. Ben, how much hope has been placed on the transformative power of digital financial inclusion? Have your organizations ever looked into the relationship between digital financial inclusion and farmers' vulnerability to poverty? I think both of you can answer that question.
Okay. All right. Going back to the point I have raised earlier, while the development of technology is fast-paced, the challenge really is in how to operationalize it, how farmers are being onboarded, how fast that is being employed to the rural communities, and the faster that is being applied and being used by the farmers greatly reduces their propensity for shocks in terms of economic crisis, because right now the most important thing is really access to both finance and market.
Yeah.
If those two factors are not present, then innovations in technology will be useless in the first place. So if we are not able to address those two factors, then there's no progress to be discussed about. So going back to the question, I think the most important thing is, making sure that these innovations are operationalized properly and being brought to the communities as fast as they can, because farmers just react to the external factors that they are in. If they are not able to sell their produce, then it has a direct effect on their incomes.
Yes.
So yeah, I think that's it for my part.
Dr. Prasun?
Yeah, actually, there are two part of it. One is the digitization and how it is operationalized, as Ben has rightly pointed out. One example I can give you, long back, maybe in 10 years before, we started working with the POS machines, the point of sales, which was mainly used for the fertilizer dealers or the seeds, where you have the point of sales and this POS machine. The farmers can use this POS machine to utilize their credit card, which is a farmer's credit card. So that is only the one part of the value chain. Now, when we talk about the entire value chain, we need to have the similar kind of benefits for the farmers when we go to the market or the forward linkage. So we have ensured the backward linkage through the digital financing system, or maybe the mobile phones, or maybe the POS. But when we talk about the forward linkage, which is the market, it is still, we have no, the e-markets in most of the cases are not working. If you consider even in the Philippines, the e-market is still not. We have a very big experience of working with the government of Philippines and the Ministry of Agriculture, where they have established a terminal market in Baguio City, where in the Baguio City, the terminal market is not properly operationalized because there is a political issue in the nearby market is still working, which is a politically very strong, and this particular terminal market is not working. And so my point here is that how this also could go, this digitalization or digitization also should support the farmers for their marketing. Like in some of the countries, they have the e-markets, and you can, but in the e-market, the problem which many countries do not, they have not yet addressed, is the lot size. So if you have a lot size, the farmers do have a lot size of minimum of 5 metric tons, then only they can go to the e-market. So that is a very big issue. So that's what our member institutions are working to go for, the aggregation model. So aggregating, and see, it is not only digitization, but at the same time, innovations should also happen at the farmers level or at the producers level, also to support this digitization. So that's my take. Thank you.
Thank you, Dr. Prasun. Another question here from one of our Zoom viewers, from Mr. Alexander Morados. How would you assess the banking system in the Philippines, particularly in serving farmers and fisher folks before and after the pandemic? I think this one is directed to Dr. Prasun, and maybe later, if you have anything to add, Mr. Simon, Dr. Prasun first.
Hey, banking system is not different in the Philippines. Because I have worked in many countries in this region as well as in Europe and Africa. What I found, the banking is almost the same. But the issue for what you have asked about the fisher folks or the farmers or the smallholder farmers, the major issue what the banks are now facing is that tailor-made products, which are currently not available. Most of the products are, the financial instruments or the products available to the financial institutions are mostly like a kind of common, which may not take care of all the factors or all the features which is required for a particular type of financing. Let's say, for example, the crop finance. Crop financing is a common no instrument or the financial product available in all the banks of the Philippines. But the problem lies that some of the crops are of 3 months, some of them are of 12 months. Now, how do you differentiate that? How do you target the 12-month crop? Because there is a segment. So segmenting that is not done. That is the first problem of these financial instruments available in the banks of the Philippines. The second issue is the aggregation model, which Philippines started no long back, like 15, 20 years before, which they could not sustain. The aggregation model is one of the best model for the smallholder farmers to get the market and the negotiate with the market, which the financial institutions are not supporting in the Philippines. The third issue, which is very particular for the fisher folks, are that the fisher folks' insurance are not linked with the financial lending. See, fisheries are more risky than agriculture. So you have to have an insurance product which is linked with your lending products. So these are the three things I think the Philippines, we are also working out with our member institution. SCPC is one of our major members since long. And they are really supporting APRACA in the work of in the Philippines. So we are taking it these areas with them. Yeah.
Okay. Anything to add, Ben?
Yeah. Okay. Actually, just brief points. In terms of the banking industry's performance in lending to the countryside, actually there are two things that we are looking at. First is the regulatory push, where we have the enabling BSP Circular 908 and the Republic Act 10,000. But what we've seen is there are limitations to these regulations, and as such, there should be the revisiting of the provisions of this regulation should be fast tracked to be more responsive, especially right now that we should be focusing on rebuilding the economy post-pandemic. And the second is the operational push from the banks. From what we've seen, especially in the banking sector, there's only this government bank that focuses on agricultural lending, and they have this, they have Agri-Value chain financing as a product. They have specific products for each crop. Because crop production is really seasonal. There's a seasonality in crop production, and your financial products should factor in the cash flow of each crop. Banks cannot afford to design specific products per crop. It's just that this government bank is mandated to do so. That's why they are doing this. So the operational push really is how do you push these products down to the farmers? Ensure that they get the financial products properly. They are secured. They have insurance. They have guarantees, and that these products are really tailor fit to what what they need. So again, if we really want to push the agenda in financing the countryside market, then we have to look at both the regulatory and how banks are operationalizing the response to these regulations.
Thank you, Sir Ben. Another question here for Dr. Prasun from Alexander Morados. In the Philippines, 5-6 credit scheme is very common. Is this scheme also common in India?
I have no idea about what is 5-6 credit scheme. But in agriculture in India, the major scheme is the farmer's credit card.
Oh, okay.
Farmer's credit card is a blanket kind of a credit mechanism where all types of farming, like starting from the fisheries or agriculture or horticulture or livestock, all of them can avail this particular credit mechanism, which is a credit card, and the credit card has been given to them based on, as Ruben was talking about, the cash flow. So it is based on the cash flow, and now I think we have around 200 million farmers already received this credit card, and they are using the credit card, which they are using for their paying to the inputs, and also pay to even to their laborers, because the laborer also do have the similar card. So the entire credit system in agriculture are now more and more digitized, which is online system. But I don't know about the 5, 6 credit.
Yeah.
I have no idea.
Yeah, that's only peculiar. That's peculiar to the Filipinos. For our next question for Mr. Ben, you mentioned about the agri-value chain financing approach. Do you have any data if this approach has improved the implementation of the Agri-Agra law?
Sadly, this approach is not being used widely by the industry, especially in the universal commercial banks. We just know one particular bank who is doing this.
Yeah.
That's why we are pushing as an industry player to push for this kind of point of view. Just as what I have said earlier, banks opt to pay the penalties instead, rather than invest in reskilling and retooling their banking personnel to do so. From our point of view, as of the moment, this is just pushing the agenda forward and introducing new things to new approach in viewing things, especially in agri-lending. And we are seeing this as a long-term battle, for the lack of word, not just putting this forward and magically banks apply it already. So what we are seeing is it's just that we put forward the idea, repeat it all over and all over again, so that it can have attraction. And supposedly moving forward, especially in response to the pandemic, banks should have an idea on how to put things forward. And the goal really is for more banks to view things the way we see it in terms of agricultural lending.
Yes.
Again, we are not SGV. We are not banks. We are just consultants, and as consultants, it is our responsibility to put ideas forward that the industry can do or can explore.
Okay, thank you, Sir Ben. Follow-up question here. Sir Ben, the Department of Agriculture has been describing the importance of a clustering approach. The important here is the aspect of financing to make it more operational. Please describe more about a specific example that this has been implemented and factors of success.
Unfortunately, I don't have any idea about what this program of Department
clustering approach, yeah,
because we don't cover DA. But I would just like to share some experiences of some of my previous experiences in cooperatives, because based on my experience, the financial sector that greatly supports countryside development are those microfinance institutions or even cooperatives. Microfinance institutions, they even develop agri-micro finance products that are tailor-fitted to the cash flow of the clients. And in terms of clustering, how microfinance works, it develops centers of farmers, especially farmers doing same crops. Like if they're clusters of corn farmers and cluster of rice farmers, and microfinance institutions come in and develop a microfinance products tailor-fit to their needs. But in terms of the performance of these products, we don't have data if it is successful. But in terms of personal preference, I think this kind of approach is a grassroots development is really one way to move forward. Because what we've seen, banks really see things at a major perspective as a banking industry as a whole. So these players on the grassroots level play a vital role in operationalizing it on the ground.
Dr. Prasun, you have anything to add?
Yeah,
Are you aware of
no,
this clustering approach of the Department of Agriculture? Yes.
No, there is a huge no issues here. Is that we are we want to do everything the bank will do. See, there are major issues in the value chain that banks have to depend on the other agencies. Like mapping a value chain is not a job of the bankers.
Yeah.
Bankers cannot map the value chain. It is not their job. So that is where the major problem is, that when you do not have a map of a commodity in the value chain, you are asking the banks to finance. How they will finance it? So they have to do a risk analysis of it based on the mapping, that who are the major actors, how many actors are there, how the flow of the movement of this product and movement of the finance. So we need to first to set right the infrastructure, logistics, whether the mapping has been done. So when the DA is offering or supporting some particular project or program, they must support with this kind of knowledge part first. So the knowledge should come from the agencies like SEARCA or maybe from the DA or ACPC, so that will be taken by the banks as a part in the while they will do the risk analysis. So it is always necessary that the banks should work closely with the departments, with the line departments, with the government agencies, non-government agencies, for understanding better. The first, understand the value chain and finance the value chain. And financing is not only by the banks, but the financing in the value chain also should be done by the private sector, who will be financed by the banks in turn. So that ecosystem has to be developed. This is the major issue. And when government try to push many things, but they need to be they need to also let know that these are the issues which we need to address first, and then we go forward. Thank you.
Thank you, Dr. Prasun. There's a follow-up question here for you. Farmers are very much averse in accessing loans from banking institutions. How do you see this? Is it structural, meaning how these loans were designed, or more psychosocial or behavior factors? That's why they are not accessing loans, applying for loans in the bank, I know. Yes, Dr. Prasun.
Yeah, no, since I started my career in a bank as an agriculture finance officer,
Yes.
We have seen this, that the farmers don't want to come to the bank due to many reasons. One of the major reasons is because nowadays even the banks are even more sophisticated, and they don't want to enter because they have to speak some of the languages, the banking languages, which they don't know. So that is where the major problem lies. But with the introduction of this reaching out to the farmers, this barrier has been reduced. Still there are barriers, but barrier has been reduced to some extent in last 30-40 years. That's for sure. Now, the second barrier which they have to address is a literacy issue. Because even if the farmers want to use the apps or the POS, they must be literate. I don't know about literacy rate in the Philippines, but I'm talking about some of the countries in South Asia. For example, India, Nepal, Pakistan, Bangladesh. The literacy rate is so low for the farming community that it is difficult for them to really access to the banking services. The second issue is that they have to fill up so many number of forms that it is difficult for them to understand, because they don't understand what they are filling up. Like for us, even for us, we don't understand why we fill up the insurance form, because they get you signed in the end of the page, the 8th page. So you don't know what you have signed. Even for the credit cards, you don't know what we signed. So we have now reduced this kind of a burden from the farming community to understand and make it a very small. So it is always better that reaching out to the farms. For example, in China, the Alibaba, you know about Alibaba. There is a finance company of Alibaba called Ant Finance. They are the major supplier of finance to the farming community now. Why? Because they could assess a farmer's need and their requirement in 24 hours time, which is impossible for the banking system. So that is a very important, that the time of know how much time you are taking to get back to the farmer and give them either the loan or reject, whatever is the way. So that is very important. That is how the farming community can get support from the financial institution. Thank you.
Thank you. I think this is the last question for this webinar. How do you see the role of the international development organizations in partnering with private firms like SGV in supporting farming communities in the next 5 years? Sir Ben? And then maybe later on, Dr. Prasun can also add to it.
Yeah, okay. Well,
So how do you see the role of the international development organizations in partnering with private firms like your firm in supporting farming communities in the next 5 years?
Yeah, okay. Just to also contextualize what we do as a consulting firm. So pretty much like we are just like an educational institution doing research and executing projects, but just in a private sector perspective. So moving forward, if international development organizations view us as viable partners in executing projects, especially when there are projects that needs a private sector perspective, then we are more gladly to participate. So in fact, our group has been actively bidding projects from the World Bank, USAID, or even OSAID. We even have a collaboration project with SEARCA funded by ADB regarding agri-value chains. So basically, our team is composed of multidisciplinary professionals. We have statisticians, we have industrial engineers, we have mathematicians and those kinds of stuff. And I think those kinds of synergy we can use in executing projects that are funded by multilaterals. And then we are more than willing to partner with them if there are agenda that we can support. So yeah, I think that's one of the message I would like to move forward, that there are private entities such as SGV that are doing these kinds of things. And also for us, there's also a change there is also paradigm shift in dedicating the talent we have as an organization and doing things in terms of supporting rural development. So yeah, we just started actually, and we are planning to expand what we are doing right now.
Mm-hmm.
And yeah, I think that's it.
Yeah, that's good to know, Sir Ben, that SGB is expanding and trying to reach out. Dr. Prasun, have anything to add?
Yeah, no, actually, we have seen that, in recent years, maybe last 5 years, a lot of international development agencies, they have their private sector window, which, for example, in World Bank, they have the private sector window where they're supporting a lot of private sector for the innovative, ideas. Like, for example, in Bhutan, we have seen one of our member institutions. They are with the private sector window from World Bank. They got some around $200 million. So they are open. I think that recently the International Fund for Agricultural Development, IFAD, has opened their private sector window also to support the private sector, those who are working with the agricultural value chain actors. Yeah. Here in Thailand, we have the USAID funded private sector projects are there, those who are working closely with the Indonesian palm oil and also the rubber industry here. Grow Asia, based in Singapore, they're working with in the Philippines and other countries. Also, they are working only for the private sector development. So it is very important to develop the private sector because they are the major vendor, they are the major anchor for a value chain. So agricultural value chain success depends on how private sector will react on it. So private sector windows are now very important for the international development agencies.
Thank you so much, Dr. Prasun. That ends our Q&A for this morning's webinar. But before we close, may I ask may I request our speakers for some closing message or takeaway message?
Yeah, no, basically, no, I have not expected specifically from SEARCA to organize this type of webinar only on this agricultural finance, encompassing the value chain and other issues of the finance. I think this type of discussion or conversation should go on because finance is not alienated from agricultural development. It should be more integrated into the system. And we are, since last long years, we are trying to let the people know that agricultural development is not an isolated thing. It has to be integrated, and agriculture finance and value chain finance. Even nowadays, we are talking more about the green financing, which we will come out later with a document. So we need that these are to be part of integrated discussion and the conversation on agricultural development. Thank you very much for organizing this webinar.
Thank you also, Dr. Prasun. Sir Ben.
Yeah, all right. Again, thank you for inviting me for this event. Well, thank you for inviting SGV for this event. It is a good experience for us, especially in the private sector, to provide ideas on how we view things. And I think the most important thing is collaboration should continue. And now more than ever, we should realize that we are all interconnected, especially now that we are facing a pandemic. And everything that in everything we do have an effect in one way or another. And so it is best that we take the best steps forward and contribute in any way we can. So I hope our small contribution helps. And thank you very much.
Once again, with SEARCA led by our director, Dr. Glenn Gregorio, we would like to express our sincere gratitude to Dr. Prasun and Mr. Simon for taking time to join us this morning. Thank you for your presentations, which significantly contributed to our understanding of agricultural value chain financing, inclusive rural finance, through the work that APRACA and SGV and company do for rural and agricultural business entrepreneurs. The challenges to achieve inclusive rural finance are evolving, and it all depends on the initiatives of the government and the support of financial institutions, private institutions, to improve the lives of our smallholder farmers. So that ends our webinar this morning. But before we close, please let us know what you think about this webinar by clicking the link to a quick feedback form, which will take you just a minute to complete in the SEARCA FB page. If you are registered via Zoom, you will be redirected to the feedback form before you leave the webinar room. Your feedback is important to us to help us improve the webinar. For those who wish to receive an e-certificate for participating in today's webinar, please visit the link shown on your screen. Please note that we will only accommodate requests for e-certificates within 24 hours after the end of this webinar session. I repeat, we will only accommodate requests for e-certificates within 24 hours after the end of this webinar session. We would also like to inform you that we issue hundreds of e-certificates after each webinar. Please make sure to type your correct name and email address. So kindly wait for your e-certificate to be issued within 10 working days. Thank you for your understanding and patience. Please join us again for our next online conversation next month. Okay, we will take a rest, but next month, starting August 5, we will have speakers who will speak about gender and youth in agricultural and rural development. That will be our theme for the month of August, gender and youth engagement in agricultural and rural development. Hope you will join us again for another online conversation and be inspired by our speakers who made a mark as youth agripreneurs. Let us help one another get through this COVID-19 pandemic. We hope that as we go along, we will be able to create a community of bigger, better, and smarter farmers and farming families. This is Kim Bantayan of SEARCA. Stay healthy, stay safe, and thank you very much. Goodbye, everyone.
Bye-bye.
Thank you, Ben.